All right, let's talk about a wild business move. Imagine you've got a company and you decide to fire your biggest customer. We're not talking about a small client, we're talking about the customer that buys 80% of your stuff. Sounds completely insane, right? Like a corporate death wish? Well, today we're looking at a company that did exactly that. And you know what? It might just be one of the smartest bets of the decade. We are diving deep into MP Materials and their absolutely audacious plan to rebuild a critical American industry from the ground up.
So who is this company? We're talking about MP Materials. They're basically the only game in town in the entire Western Hemisphere when it comes to producing rare earth elements. And if you don't know what those are, just look around. They're the magic ingredients that power, well, everything, from the iPhone in your pocket to the guidance systems in fighter jets. And here's the kicker. They just made this radical pivot, this huge break from China, that could go one of two ways. It could either secure America's tech future for decades, or it could totally crater the company. So the big question is, was this a stroke of genius or a fatal mistake? Let's dig in.
Okay, first up, the great pivot. And honestly, to really get what MP Materials is doing, you've got to understand just how massive this change was. I mean, it's not just a tweak to the business plan. For years, their whole identity was basically being a supplier for Chinese giant manufacturing engine. They dig stuff up in the US and ship it over. Profitable? Sure. But also incredibly risky, right? Your entire business is at the mercy of another country. Now they're flipping the script completely. They want to be the bedrock of America's own tech and defense supply chain. This is more than a pivot. Really, it's a declaration of economic independence.
And this slide just lays it out perfectly. On the left, that was the old way of doing things. You know, dig up raw materials, put them on a boat, and ship them almost exclusively to one buyer in China. Super simple, but also super vulnerable to politics, trade wars, you name it. But now, look at the right. This is the new vision, a completely American supply chain. We're talking from the mine to the processing plant, all the way to finished high-tech magnets that go into products for the US government and its most important companies. They're not just trying to change their business model, they're trying to redraw the entire global map for these critical materials.
And this quote, wow. This is straight from their official filings. Quote, ceased all further sales of its products to China. I mean, just let that sink in. To just walk away from your main source of income, that's a move that would send most companies straight into bankruptcy. But this is where the story gets really interesting. Because for MP Materials, this wasn't the end of a chapter, it was the explosive start to a brand new one. What they did next completely redefined the entire company. And you just have to look at the timeline to see how fast this all went down. I mean, this wasn't some slow 5-year plan. This was a blitz. On July 9th, boom, they announced a partnership with the U.S. Department of Defense. 5 days later, July 14th, another bombshell, a long-term deal with Apple. And then, just 4 days after that, they go out and raise almost $750 million. So in about a week, they went from being tied to China to being partners with the Pentagon and Apple, with a huge pile of cash to make it all happen. That's not just fast, that's corporate strategy at light speed.
All right, so the strategy is ambitious, it's bold, it's exciting, but a great story doesn't pay the bills, right? So now we have to look at the numbers and decode the financials. How does a massive pivot like this actually look on the balance sheet? And I'll tell you right now, at first glance, the numbers might make you a little uneasy.
So here it is, a net loss of $53.5 million in just the first 6 months of 2025. And yeah, that's a big red number. But here's the thing you absolutely have to understand. This isn't a story about a failing company. This is the cost of doing business when you're literally shutting down your old revenue stream to build a brand new, very expensive one. This is what an investment phase looks like.
And this chart right here, this is the story in 2 bars. Look at the first one. Sales of that raw, unprocessed stuff, yeah, down 51%. That's them turning off the old business model. But then, look at the second bar. Sales of finished products, the high-value stuff, are up 283%. These are the products that go to customers like GM for their electric vehicles. So you can see it happening in real time. They're moving up the food chain, from selling rocks to selling advanced technology.
Now, as you can imagine, building giant high-tech magnet factories from scratch isn't exactly cheap. So to fund this whole transition, they've built up a massive war chest of cash. We're talking about $1.5 billion in cash and short-term investments after that July offering. This money is absolutely critical. It's their runway. It gives them the firepower to build out their American factories without having to panic about making a profit tomorrow.
Okay, so this all brings us to the big debate, the bull versus the bear. There are basically 2 completely different ways to look at MP Materials' future.
You've got the bull case, which sees this company as the next great American industrial champion. And then you've got the bear case, which sees it as a terrifyingly risky high-wire act that could go wrong at any moment.
So let's break it down. The bulls, the optimists, they look at this and say the company has actually been de-risked. Think about it. Demand is basically locked in from the Department of Defense, Apple, and GM. And this is the real kicker. That DoD deal comes with a price floor of $110 a kilo. That is a massive safety net. It protects them from getting undercut by Chinese competitors. But then you have the bears. They're looking at the immense execution risk. I mean, building these factories is incredibly complex. What if there are delays? What if they go over budget? And they're not doing this in a vacuum. They're going up against fierce Chinese competitors who've been doing this for decades.
All right, so we've weighed the huge strategic pivot, we've looked at the messy financials, and we've sized up the bulls and the bears. It all comes down to this, the final verdict. Is it a buy, a hold, or a sell?
You know, after this absolutely radical transformation, what's the call? We've seen the incredible risk they took, but we've also seen the monumental new partnerships they've built. This is really a make-or-break moment.
After looking at everything, our definitive recommendation is a buy.
And here's why. We think the recent strategic moves have set the stage for some really significant long-term growth. So we're putting a 5-year price target on this of $95.
So let's just boil it down to the bottom line. The strongest argument for this whole thing, that partnership with the Department of Defense, it is an absolute game changer that basically de-risks their future demand and their pricing. Now, what's the single biggest risk? It's all about execution. They have to prove they can actually build these ambitious new magnet factories on time and on budget. But you know, while that execution risk is definitely real, having the US government in your corner, well, that's a pretty powerful safety net, and it gives them a clear path to becoming profitable.
So at the end of the day, MP Materials is betting that it can rebuild an entire American industry. The real question is, are you betting with them? That's our take on MP Materials. Make sure you subscribe for more deep dives into the companies that are really shaping our world.